Thanks for joining us for the Providence Quarterly Updates. My name is Michael Ogg and I'm here with Grant Patterson, the Chief Investment Officer at Providence. Welcome, Grant.
Thanks, Mike.
Grant, you've mentioned in the Global Outcome Strategy that there's this recalibration. Can you explain what that means?
Yeah, sure. I mean, this time last year, we felt that 2018 was going to be a year of change, and we certainly saw that as the year unfolded. In fact, 90% of all asset classes were down last year, so it was a very, very tricky year. And this is at a time when central banks are starting to unwind their quant easing. And we feel that this is a recalibration that the market is going through, readjusting with the central banks, and particularly the Fed, moving from quant easing to quant tightening, therefore putting up interest rates at a time when there is record global debt. So we think markets are trying to readjust to that new paradigm.
Grant, with this change to quant easing and the central bank's positioning, what impact does that have on the global economy?
Well, the global economy is starting to slow. We're starting to see the forward-leading indicators slowing down around the globe. The US is the exception, is still quite strong, but in Europe there's certainly been a slowdown, and Germany posted its first negative GDP for some time. China's growth rate has slowed down, and in fact imports are down quite sharply over the last couple of months. So, you know, the economy is still pretty lacklustre, and certainly interest rates rising will put further pressure on the global economy, which may in a turn mean central banks will be a little bit more cautious about raising rates, particularly when markets are so volatile.
And how does that flow through to the Aussie economy?
Well, the Australian economy is undergoing part of its own adjustment, particularly led by housing. I mean, there is a significant downturn in housing, which is certainly in the headlines, and we've been talking about that for some time and been concerned about that, led by the record level of household debt. So the Australian economy, I think, is a bit vulnerable with a housing downturn. And if you start seeing a noticeable slowdown in China, then I think while households have still got the record debt levels, I think it's going to be very tricky. It probably means, though, that the Reserve Bank won't be increasing interest rates for some time. And therefore I don't see any rise in interest rates here in Australia for a while, which might put some further downward pressure on the Aussie dollar.
And Grant, do you see any systemic issues out there at the moment that worry you? Well,
the issue that really worries us is the record global corporate debt. I mean, global debt now is at record levels of about 320% of GDP, way above what it was in 2007. And really all that's happened in 10 or 11 years, that the debt levels we had back then was in the household sector. Well, now it's in the corporate sector at a time when central banks are starting to unwind quant easing and interest rates are going up. So that's something that does worry us, particularly if the global growth slowdown continues to come through.
And Grant, I'm going to ask you to crystal ball slightly. So what's your view on asset prices and opportunities for the next 12 months?
Well, I think it's going to be a volatile year. I mean, it's going to be a tricky time when there's a change of policy. So I would expect volatility to stay quite high. But when there's volatility, there's also opportunities. I mean, valuations have come back to reasonable levels now. Forward PEs in global markets are back to long-term averages, which is quite positive. Credit spreads in high yield in particular have blown out, so you're getting paid more for taking the risk. So I think there will be opportunities, and certainly here in Australia with property. I mean, you know, there's some distressed properties is going to be an opportunity for us, and we're certainly looking at that quite closely.
And Grant, can you just touch on franking credits? It's an issue which a number of clients have raised with me over the last couple of months.
Yeah, so it's one of the other issues that the Australian economy has got, is that we've got the election coming up this year. And there's been a lot of talk about the franking credits. Now, we've got to remember that this only applies to non-tax paying entities. So super funds in pension phase won't be able to claim back the cash refund. We've had a look at our portfolios, and the impact is very small. We calculate about 0.25% difference in income. So we still see a balanced fund generating income in the order of 4 to 5% going forward.
So Grant, is there any updates on Providence that you'd like to share with us?
Yes, Mike. Well, Will Porter's back from London after spending 2 years over there, which we're delighted to have him back in the office here. And also just the use of technology that we're using during the volatile period of December, late December, while we're overseas. You know, I was in New York. We were able to talk to Will in London, yourselves in Sydney, and James in Melbourne, all at the one time discussing the outlook. And in fact, we did commit some money to the markets during that period of time. So the technology is working quite well for us and for us to be able to get together at any stage.
Thanks, Grant, very much. Thanks for your insights. Thank you for watching, and we'll be back in the next 3 months for the next quarterly. Thank you very much.